Hello everyone and welcome back to another video where we're talking investing in stocks. Today we're talking tech stocks. Now before I get into the video, make sure you hit subscribe and the notification bell if you want to see more videos. Drop me a comment if you have any questions. I try to answer absolutely all of them. Most of the time I do. Now when it comes to investing in individual companies, the tech sector is by far the most popular, far outweighing its more traditional counterparts like industrials, financials, healthcare, or energy. And ever since the personal computer came rolling around in the 70s, tech stocks have been all the rage through the 80s, 90s, even through the dot-com burst, and to this very day. Just take a look at the market cap of the likes of Facebook, Amazon, Netflix, and Google, today's alphabet. Tech stocks have been soaring for decades. And the Nasdaq, so the technology indice, has far outperformed the S&P 500 and the Dow Jones, which are more traditional diversified indexes. So tech has really taken off, not just in popularities when it comes to the companies, but also as stocks. So in today's video, let's have a look at why tech stocks are so popular. Let's try and put them into categories. Look at some of the prominent companies. Let's look at some up and coming ones. Let's see if there's some ETFs or index funds you can invest in. Let me give you my favorite picks and then I'll talk a little bit towards the end. Now, if you don't want to listen to me go on forever about tech stocks, there are timestamps in the video description, so you can jump ahead to any particular part of the video you might want to skip to. Whether it's the ETFs or my favorite picks, go and skip right ahead. Now, the word technology, or tech for short, has been a bit washed out over the years, and it's being used and applied to all companies everywhere. So what do I mean when I say a tech company or a tech stock? You know, it should be primarily a company using technological software, hardware, or the internet/telecommunications to make their money. So you've got hardware companies like Apple and IBM. You have software companies like Microsoft and Adobe. You have telecommunications semiconductors like Broadcom and Qualcomm. You've got social media companies like Facebook, video game companies like Activision Blizzard, and so on. So it's going to be a wide range of companies, but let's try to stick to software, hardware, and then the internet/web on top of that. Now that we know which companies we're talking about, let's have a look at why they became so popular investments. Now, ever since the personal computer and the internet was introduced in the 70s, and the tech era was ushered in by the likes of Microsoft, IBM, Apple, Cisco, Amazon, Qualcomm, and so on. You know, these companies have really been dominating the headlines and investors' watch lists ever since. And I think the main reason is the innovation and growth and profit margins that tech companies have that companies in other sectors lack. Companies in energy, industrials, mining, financial, healthcare, consumer staples. These are more traditional, slow-moving, heavy companies. Tech companies are light on their feet. They don't need heavy minerals or big machinery. They can just create sort of software and social media platforms and video games out of thin air. So it's not very capital intensive, but you get a lot of money in. Thus, it's not unusual for big companies, even like Apple, Microsoft, or Amazon, to have profit margins of 30 and 40% plus, which is unheard of in almost all other parts of our economy. Now, because of these exciting innovations and high profit margins, you know, investors and Wall Streeters were having a party, an absolute party in tech stocks, which sort of came crushing down in the year 2000 when the dot-com bubble of the 1990s burst. But although stock prices came crumbling down, most of the tech companies just kept on like usual, and they kept becoming bigger and bigger, and they kept driving innovation and making acquisitions, and they've been surging ever since. Companies like Amazon, Netflix, Facebook, Google, and Microsoft. So it really didn't stop them whatsoever. Now, I could go on and say, we got hardware over here, we got software over there, but in the stock market, we have many different small categories that we use, such as cloud computing, e-commerce, streaming, gaming, financial tech, software as a service, and so on. So these are the categories we use in the stock market. And just to give you some examples of categories and some companies within them, let me give you a tiny little list you can have a look at. So you've got telecom companies like Verizon and Broadcom. You've got semiconductors like Nvidia and Intel. E-commerce like Amazon, Alibaba, eBay. You got gaming like Activision Blizzard, EA, Take-Two Interactive. Cloud computing like Microsoft, Amazon, MongoDB, Salesforce. You've got social media like Facebook, Snap, and Twitter. You've got streaming like Netflix and Roku. Financial technology like LendingTree and Square. You've got cybersecurity like CrowdStrike and Palo Alto. Which of these categories and companies are behind this search? Who's leading the charge, so to speak? Well, it's probably going to be your go-to FANG stocks, so Facebook, Amazon, Netflix, and Google, joined by the likes of Microsoft, Nvidia, Oracle, Adobe, Activision Blizzard, Alibaba, AMD, Salesforce, and so on. I mean, since every tech company seems to want to begin with the letter A, I guess we could go with FANG or something like that. Now, besides these, it's also ETFs like Invesco's QQQ or Vanguard's VGT, which are technology ETFs. So investors buy these ETFs and it gets spread across all the big tech companies. Also worth noticing is that since all these tech companies like Microsoft, Apple, Facebook, Netflix, and Google are also the largest companies in the world, this means that when people are buying index funds and any ETFs, like an S&P 500 ETF or a global stock fund, they're automatically actually contributing to these companies. So whenever you buy a global index fund or S&P 500, you get many shares of Microsoft, Apple, Netflix, and Google, whether you want to or not. And although the tech sector seems so new, fresh, and exciting, full of small upstart companies, it is actually quite consolidated around these big companies like a Microsoft, like a Google, like a Facebook, because of their high profit margins and all the cash they have saved up over decades of being the darling of the stock market, they've been able to buy up all their competition. So whenever a new piece of software or a linchpin technology or an upstart Silicon Valley company comes along, whoop, here comes Google or Microsoft and just scoops them up. And they're essentially buying up companies that could potentially turn out to be future competition. So there are some big players and they are really big with lots of smaller companies beneath them. But sometimes the tech sector just moves too fast, even for these super rich, crafty tech giants. And there's a lot of exciting things and a lot of exciting companies popping up in streaming, cloud, artificial intelligence, machine learning, blockchain, software as a service. So let's have a look at some of the newer players. We've got Square, which is a financial tech company revolutionizing the way we pay for stuff. MongoDB, a small but growing cloud player. Roku, the next up streaming giant. Take-Two Interactive, an exciting video game publisher with titles such as GTA, Red Dead Redemption, Borderlands, and NBA. Twilio, a new communication platform as a service company. Autodesk offers software for architects and engineers in all fields. Shopify, an upcoming e-commerce platform trying to fit in between giants like Amazon, Alibaba, and eBay. And a company like CrowdStrike, which is really the new breed of cybersecurity software. So those are some of the newcomers if you want to invest in smaller companies with more potential upsides. But if you don't want to go with any of these new players or the established ones, of course we have index funds and ETFs. We love some ETFs. And when it comes to tech, there are truly some fantastic ETFs, like Invesco's QQQ, which tracks the Nasdaq, which is a tech index on Wall Street. We got Vanguard's VGT, that is Vanguard Information Technology, which is a broad tech index fund. We've got IGV, which is software, so that's excluded hardware and entertainment and such. We got IXN, which is global tech. It's going to be mostly US tech, but there are some international ones like SAP from France, for example. We got ARK ETF, a tick symbol ARKK, which is a diversified disruptive technology fund. Sky, which is cloud computing. SQXX, the semiconductor index. Hack for cybersecurity, and Robo for robotics and automation. So if you don't want to bet your money all on one or two companies, these are the ones you should go for, in my opinion. So if you're thinking about investing in these stocks, you probably want to know, how much money can I make? Well, let's make it simple. Let's look at the 10 biggest tech companies and see what they've been doing for the last couple of decades since the year 2000, so you can get an idea of how much money you can make. So let's throw up on the screen the graph from Microsoft, Apple, Amazon, Alphabet, Facebook, Netflix, Intel, Nvidia, Adobe, and Salesforce. Now, these companies have outperformed the S&P 500 so badly that I had to make two separate charts, because when I plotted in Netflix and Amazon and Apple, they had gained so much that you couldn't even see the graph from S&P 500 or the Dow Jones. And if you have a look at the tech index, the Nasdaq, it has surged 299% over the last 20 years, leaving Dow Jones and S&P 500's 125% in the dust. And of some of the most prominent tech companies, popularly called the FANG stocks, Facebook has surged 667%, Amazon 1,900%, Netflix 4,363%, and Google 390%. There's just no comparing the general market to these stocks. They've really just been surging for decades and decades. Now, of these raging tech stocks, my personal favorites will have to be, first and foremost, the ones I hold in my personal portfolio. So that would be Microsoft, Amazon, Activision Blizzard, MongoDB, and the Trade Desk. I guess you could throw Alibaba in there. So here you've got e-commerce, gaming, and cloud computing, as I alluded to earlier. Those are my favorite spaces within technology. Outside of those, on my watch list, I would definitely put Nvidia, Netflix, Adobe, and Square. So you got software as a service, streaming, semiconductors, and financial technology. These are all companies I've considered investing in and may or may not in the future. And I have been an investor in Nvidia, Square, and Netflix previously. And I've really been a fan of the tech sector ever since I started investing back in 2013. In fact, Activision Blizzard and Amazon were my two first real investments. And I see no reason to look much further in the next 10-15 years, because by far the most exciting stuff is happening in cloud computing, cybersecurity, streaming, software as a service, financial technology, machine learning, and artificial intelligence. This is where most of the growth is happening. So if you want to find the next Facebook, Amazon, Netflix, Google, or Microsoft, I'd say go with one of the small players in one of these industries, maybe cloud computing, software as a service, blockchain companies maybe, and just buy some stock and hold. It's going to be a wild ride, but I'm pretty sure it's going to pay off in the end, just like these companies did when they were considered wild plays back in the early 2000s. So I think tech is still the place to be. Hope you got somewhat of an overview of the sector now. Again, ask me if you have any questions about anything I've mentioned in this video, any company, any sector, I'm happy to answer. And as always, I'll see you guys in my next video.